Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will apply the classical technical analysis methods to the S&P 500 index. And let us see the chart. First of all, let us very quickly revise the index structure over the monthly chart. Of course, we can see here that it already formed a giant monthly peak, reflecting from the monthly historical resistance around $4,800 points. And so the structure is of course clearly pointing to the downside, and the structure of the index is negative since it reflected from the monthly resistance, forming a giant, very long-term peak. Let us check the long and medium term picture over the weekly chart. We can see very clearly that the downtrend is very well established over the weekly chart, and here is the trend line connecting these two peaks. And as we can see, on the third time testing this level, it also failed to continue its correction and started, as usual, an impulsive wave. And as we notice, impulsive waves always, or most of the time during strong downtrends, it reaches easily the channel line. And we can see that the channel line has been reached 2 times, 3 times, even broken to the downside. So it is expected that this impulsive wave over the weekly chart showing the long-term downtrend, we expect this impulsive wave to reach the channel line as it did many times before. So if you took a look or take a look around the levels of the levels where the channel line is running, we can see it is around 3,600 and maybe a little bit less, because as the impulsive wave continues to fall, time passes by and the channel line gets lower and lower. Okay, let us take notice of the size of the black candles. They are relatively big with small or no shadows, indicating strong selling pressure and that the sellers still have the upper hand during this phase. Here we go. Over the daily chart, the short-term details shows that the upward corrective wave is finished. The corrective wave is broken. The index reflected from the trend line over the daily chart. It's creating over the short term lower highs as well as lower lows, and over the very short term it created an impulsive wave, and this impulsive wave is very strong. Why is it? Because it even broke through down, it broke down under or below the important short-term support or expected support around 3,950, and this was the Friday close, which means it was a weekly close. And of course this has much more significance than just a daily close. So we notice also over the hourly chart, the ultra short time frame is also very negative, and we can take notice that over the hourly chart we take notice that the very short term ultra short term trend is down, and of course it is the impulsive wave actually, but we should notice that the channel line of the hourly chart is also broken, and we all know that the break of the channel line is increased strength in the prevailing trend. So this trend, this ultra short trend, is downtrend. Therefore, the break of the channel line is increased strength in the prevailing trend, and this is the case. We can see increased selling pressure, and the sellers still do have the upper hand during the close on Friday. So we expect this impulsive wave to continue towards 3,700, maybe 3,600, maybe less, according to where it reaches the channel line and the time frame at which it will reach the channel line. If it reached early, the target will be around 3,700. If it reached the channel line lately, it will be around 3,600. In all cases, S&P is under strong selling pressure as long as it is performing below 4245, which was previously considered a very important critical support, as we can see over the daily chart. And this was a very important and significant weekly support. Of course, it did not manage to respect this support, and gradually it turned it into resistance 2 consecutive times, as we can see here. So therefore, I think that the market is in a very bearish environment, and the negativity continues as long as 4245 is considered a resistance, and the targets, as we mentioned, are relatively considered a little bit far. For the other indexes, I think the picture is identical with a little difference in the numbers, where you can find the 4245 of S&P is the 33,500 in Dow Jones. This is the match of the 4245 of the S&P, and instead of 3,700 the target in S&P, it is around 30,000 the target in Dow Jones. The picture is identical, the difference is just numbers. The Nasdaq is considered of being much higher in volatility, so its numbers are more far away from each other than the other indices, but in general it is also under very strong selling pressure. The downtrend over the weekly chart is very well established, with a failure break here, which of course led to some losses, and the impulsive wave is created and formed and completed, targeting much lower levels around a psychological level, maybe 11,000. That's it for now concerning the US market indices. Thanks a lot for watching. Please feel free to like, share, and subscribe. See you soon.